Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, March 13th. Michael Boutros here with you this morning. We just got the release of US CPI numbers a couple of seconds ago, coming right in line with expectations, guys. Most important read year on year came in at 2.2%. That is an uptick from last month's 2.1 read. Core ex food and energy right in line with expectations at 1.8%. So nothing here pressing that I think would alter or shift Fed policy. So with that event risk out of the way, we do get some more data later in the week. But for today, I think that's pretty much going to settle it. Good to be with you guys this morning. So for today, we want to go over all the setups that we were looking at in last night's update, specifically Aussie dollar, sterling dollar, dollar yen breaking higher today. And certainly at this point, it's actually challenging the monthly opening range. So we have to be mindful of this advance. Euro CAD, we identified the turn last week off of a huge critical long-term resistance barrier. That pullback, finding some rebound here early in the week. I'm looking for that to offer an opportunity as well. And Aussie yen, right into resistance. We've been following that trade like a hawk for the last 2 weeks. And we hit our last target in overnight trade, or last night rather, I should say. Also want to take a look for the previous update, specifically on dollar CAD and euro dollar as we head into the start of the week. So look, some things are a little stretched, but for the most part, a lot of these trades are still within the confines of their ranges. So we'll look at those setups. And as always, guys, if you have any other questions, trade setups, specific pairs you would like to discuss, feel free to throw them on the message board at any time. Okay. So real quick look at the DXY. This is what we looked like last week. It kind of ended the week at a pretty precarious trade. Here's the start of the week last week. We broke below the lower parallel, really struggled at that 50% retracement. Former trendline resistance offered some support there on that last stab. Break higher. Last week we were trading right back into that gap, right? So here's, the broader picture for DXY right now is still that same range. Which is why I didn't really offer a new update on this yesterday. We're still trading the same exact levels, okay? We came full circle back. We filled the gap, even tagged it. And here's the start of the week right above that 38.2 retracement. So I'm still working the same levels here. Last week we noted that our bearish invalidation was 90.67. At this point, you kind of want to just bring that up to last Friday's high. If we break above last Friday's high, there's a larger recovery, I think, or a larger risk for a bigger play. As it stands right now, well below Friday's high, I'm going to continue to like the lower side here in the DXY. Forget, we do have the FOMC on tap. I believe that's next week. So a lot of dollar price action here, or a lot of event risk for the dollar still coming into the end of the month with that FOMC interest rate decision. Look, the basic premise for me to start the week is going to be lower below Friday's high. Key support still going to be the 2018 low day close. That takes it down to 89.08. Just ahead of that, you have the 618 of the advance. We didn't quite make it there last week. So watch 89.28 and 89.08 as your key support barrier here on a move lower into DXY. Again, the inflation numbers for today, not really looking like there's much deviation from what the expectation was. I don't think you're going to get too much play off that. The one shining thing I do want to note is that real average weekly earnings, okay, which is, again, another derivation of a measure of wage inflation, which we know which is the Fed's primary concern right now out of their dual mandate. It does look like that came in stronger at 0.6%. I wouldn't necessarily say that that's a huge beat, guys, but the previous read also got revised up from 0.4 to 0.6. Average hourly earnings, those came in soft, 0.4 versus 0.8. So still a mixed picture here, nothing to rush the Fed. And broadly speaking, still leaves our downside bias in the DXY pretty much in line. Again, keeping in mind where we are on the weekly charts in the DXY, we're following the 1994 price analog. If this is still going to follow suit, we basically are looking for a new low before a larger recovery here in the DXY. Okay, so that's the weekly chart, daily chart, no change. Here's your monthly open. And intraday, looking to confirm a move below that parallel right there. Want to stay bearish below. Friday's high comes in at 90.34, guys. The gap I wouldn't worry about right now, so let me just move that for you. That's the amended levels. All right. Any questions here on DXY? Again, always remember you do have that option, guys, to take a snapshot of the screen if you ever need to update the charts or keep an updated copy with you. Feel free to do that. Okay, so that was a quick look at DXY. Really, there's nothing to update from last week. And let's jump into last night's update. So first things first, Aussie dollar. So the pullback to buy, that's basically the theme of what we were talking about. I'm still looking for that, pullback in price to offer some entries. If we don't get it, we don't get it. It looks like we're trying to break higher here. At the end of the day, 79.25, 79.85 into 79.92 still remain both key regions of resistance targets that we're looking for on this stretch. Bullish invalidation remains unchanged from last night. We're going to keep that at 77.96, basically the 78 handle. If something were to materialize where price goes below that, I think that would be problematic. The ideal scenario, guys, was to see this thing fail early in the week, give you a pullback towards 78.25, if not the lower parallel, somewhere for an entry here for the resumption higher. But at the end of the day, if we are able to really materially clear that slope, I think you do risk that continue to run towards 79.25. Again, knowing the direction is only half the battle. So if you're not already long here, guys, there's no responsible way to really place a conviction stop. I mean, even if you place a conviction stop at the weekly open or the weekly opening range low, that's still all the way down at 78.40. So talking about a 50 pip stop, and you're looking for just over 40 pips on the upside or 30 pips on the upside for the initial target. So I can't get excited about doing anything on the long side here. Also, if you take a look at the momentum signature, not the most constructive, right? We've been making higher highs since the start of the week, higher highs, higher highs, higher highs, unable to make any new material highs in the oscillator. So momentum looks a little tired. I wouldn't short it by any means, but certainly trying to get in on the long side of the trade. I just don't think that you have a setup here if you're not already long. All right. And by the way, I put that last night as the bullish invalidation level at the 50% retracement. I just want you to know that was based on last night's high, so that's going to keep moving up with price. I hate doing this, but I'm basically looking at the lower parallel. So where it says on the reports, guys, where is Aussie from last night? Basically lower parallel / 77.96. Keep it basically with the lower parallel. So at this point, the 50% gets raised. You're basically looking at 78, but you get the picture. That's this region right here. All right, still think you get some sort of fizzle higher before a larger pullback to get in. So I'm kind of sitting this one out for now. One thing I'll note is that basic slope that we were talking about from last week, support, 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 break, ever since been resistance, resistance, resistance. Last week, resistance. We popped above on the close here, or on the open of the week. We've been moving higher. So look for a pullback, initial support here. That would get you at least entry against the weekly open if you got a decent trigger, if not the lower move towards the parallel. But ultimately, we are looking for that stretch near 79.90s, 79.85 or so, the median line, basically. Okay, any questions on Aussie? You do have Westpac Consumer Confidence Index numbers coming out tonight. Shouldn't be a major market mover. We're pretty quiet on data out of Australia until the 19th. And you get the RBA minutes at that point. I think it might move something, but look for dollar to really be driving this one. If the dollar continues to move lower, we're right on track. So we'll go over Aussie yen in a moment. That's my favored move. That one's coming into an area of interesting resistance right here. So if that breaks higher, guys, I do not want to touch it. The long play for us on Aussie yen is over. We hit the last target, and I don't want to touch it right now. Let's see what happens. If it materializes on a daily close above this threshold, you know what? Let me take a second. Let's just talk about it right now. I'm sitting there talking about it, looking at Aussie dollar. Here's Aussie yen. And I wanted to go over dollar yen first just to show you the yen weakness story. But this is important just because anyone who's been following this one since last week, this was our last target. And certainly for me, I'm no longer in any positions here. This is going to be make or break, at least near term. Recall, Aussie yen came off of a massively important threshold last week. Sorry to go back and forth, guys, but here's really quick the Aussie dollar trade. Okay, why we started looking higher last week was simply because of where we opened the week. We were opening the week right above the swing highs that we made for the Q1 high in Aussie dollar price action. This level coincided on the 52-week moving average. Slope, it's a basic parallel of the support structure we've been following, which has 3 touches. And basically your yearly open was right here. Obviously, we were sinking below, but you have the 200 long-term week moving average and the yearly open right there. So we were looking for the rebound. It materialized. Aussie yen was even more so of a critical juncture based on this. Okay, swing highs from the pivot that we made in 2000. Well, let me start from the beginning. Basically, the 2015 low, right? 2016 swing high pivot, break, saw acceleration. Last year's low, concrete swing low and close low. Okay, here we are again. So right off the bat, again, we were looking for that rally, possibly the tag into resistance. Note this slope. Basic trendline resistance, 1 touch, 2 touch, 3 touch, a parallel extended off the low from last year. Converges right here. We saw that hesitation. The break accelerated into that basic support, swing lows. Here's the reversal. And again, that slope is in focus as resistance on the weekly chart. So for Aussie yen, I'm going to curb all my appetite for the long side. We loved it last week. It was awesome. The first play was right into the median line. Near term, there was some structure there as well. That broke. Got a little hesitation here, but this was the final pop into resistance. So here's Aussie yen on the daily chart. A basic slope extending off the highs from last year, specifically here in September. You can see that pitchfork, right? A sliding parallel, that same slope, caught the lows this year. Again, that 2017 low day close. Perfect rebound. The play for us was right into 83.73, right? That was the first area. Once we broke there, the median line and this big area of resistance, a basic 38.2 retracement of this year's entire range. And again, the 2017 open pivot from last year. So I'm really interested to see how Aussie yen continues sort of early in the week because, again, we've had a 3-day stretch rally, nice trigger break there at the lows, really give us further confirmation of playing the upside approach. Here's RSI approaching 50. Okay, intraday looks like this. A near-term slope, just extending off the highs that we made this year, specifically on January highs, and specific on the 5th and the 22nd. This pitchfork has been in play. Again, a parallel of that same slope caught the lows with precision. Here's the advance. Okay, and here's what we looked like last night. Well, I guess the previous update, just to give you a quick reminder, looked like this. And we said, look, basically, as long as you stay above 82.19 near term, we're going to want to buy pullbacks targeting the median line first. And then that key region of resistance at 84.25 into 84.39, right? So here it was. We rebounded off that. On the pullback, you got only as low as the low day close, almost missed that even, 82.46 before the break late last week. We closed essentially last week right at the 50 line. This week, we've had a nice little near-term consolidation we highlighted yesterday. And again, that advance had us looking for a last final stab into resistance here at 84.39 into 84.25. Here it is. Okay. Basic slope or channel resistance. This is a basic channel support or basic slope support extended off the highs here. Now, again, most of the time we'll be looking for an extension off the high like this. But when you take a parallel and you see clear-cut conviction, right? Resistance there. Yeah, we spiked through, but on a closed basis, it held, again, with precision to start the week. Look at last night. Can't get more precise than that, right? So I think you get a little bit of an interruption here, okay? You know what I mean? If this thing rips through and closes the day above 84.39, more power to you on the long side, 85.28, 86.18, your next top side targets. Near-term support at this point, I'm still going to keep bullish and validation down here at 83.27, guys, just because the nature of the pivot, support, break, acceleration, resistance, break, acceleration. I'm going to keep that as our near-term bullish inval. Initial support on the pullback, I'll be looking for the weekly opening range low, which coincides on that lower parallel. So real near-term, if this thing is going to break higher, expect some support here. Okay. and look for a reaction there. If that holds, then yeah, I think you move on to 85.29 and higher. But right now, the risk, obviously from a momentum standpoint, you have a pending trigger in RSI. If this materializes now with this 2-hour candle closing below this, would be a very convincing outside reversal, outside 4-hour reversal. This is a 2-hour chart. Let's see what the 4-hour looks like. Off resistance. Well, again, I see a decent pin bar in the 4-hour too. So it could be near-term exhaustion. I just want to highlight this as my near-term weekly opening range. I will be looking for the break here to offer some validation. One other thing, I just want to take a parallel off that high, right? If we got a parallel off the low that held, maybe this parallel off the high might offer some resistance too. Questions on Aussie yen? Okay, that is number 3. Let me go back to dollar yen. I'm going a little out of order here just to keep the yen theme going. So obviously, yen weakness seems to be the play. Despite the dollar pullback that we're seeing, dollar yen broke through the highs that we were talking about last night. But here's a big, again, outside candle reversal off of today's CPI data, which again didn't really shift the needle at all. So last night, my sort of base case scenario for dollar yen was to look for a little bounce here to hold near the parallel for a move lower into basically 105.94, right? So we got the rally into initial resistance, but it ripped higher and turned. So I have nothing to do with this right now. Again, I do think ultimately our bearish invalidation level, as we noted, is still up at 107.83. I don't want it to get quite that high, but the possibility is there. Here's dollar yen from the top-down approach, weekly chart. So I'm short dollar yen 107.10, says Pooja. So let me break this down for you. Basically, last week we talked about this, right? Basically a swing low, but a decent pivot in price. We also had a slope there, same slope of the dominant trade or trend that we've been covering since 2015 decline. Sure, momentum, basically showing you a little bit of a weekly divergence. So we were looking for a little bit of a pop higher. Our bullish invalidation, or bearish, excuse me, still this pivot zone. Remember that this was last year's lows, former swing highs from 2016. You had basic trendline support off the 2012 low there, multiple tags, confirmed region. So this is your world for dollar yen right now, 105.19 into basically 108. Okay, that's basically the dollar yen universe as it stands right now. Here's dollar yen on the daily chart. Again, highlighting 107.45 into 107.50 as your sort of big zone of resistance on this break that we've seen since we broke below. And to start off the week, I was kind of hoping that you'd see median line resistance here hold because we held it on Thursday and Friday. Here's the start of the week. We're probing through momentum, still holding that momentum trigger. So I can't make any assumptions as trying to call a reversal here. Okay. What I will note is that your objective monthly opening range is now being tested. Here's your objective monthly open. There's the monthly opening range highs. Let me just mark it for you real quick. We'll get rid of it in a moment, but right there, 107.20. So you're short from 107.10, Pooja. Nice area. You know what I mean? My only concern, ideally from a risk standpoint, you're right at the top of the range is where you want to be, right? From a conviction standpoint, to favor this trade actually materializing, I do think the near-term chart needs to give us a little more. This is a start. A move through the weekly open would be a nice sort of indication, at least for a near-term breakdown. That would be 106.63. But as I noted in yesterday's piece, basically it's the break below 105.93. Okay, that would put resumption of the broader downtrend that we're in my humble opinion. Basic slope off the lows. You have a 618 retracement of that advance. Now, obviously, we've made a new high. So if you stretch that, it's going to kind of shift the target a little bit. But one thing I wanted to do, is show you this real quick. Okay, so if this pitchfork is in play, which we don't know yet, but I can tell you initial indications look pretty darn good. Okay, obviously the lower median line parallel did see a little bit of a messy play here last week, but you have 1.2 point perfect precision rebound last night. The 50 line for this formation, you have initial tag of resistance here, twice, thrice, 4 times. Looks like we just did it again. So I'm starting to favor working with this slope near term. And again, it would highlight near term support, Pooja. Watch the weekly open. If we get through that, that's encouraging. Basically, you're looking back at the 618 retracement, 106.37. This is not the advance. This is a longer term retracement. I guess I should show you that on the daily chart of the advance off the lows we made in 2016. Okay, so it's basically this advance, this rip in dollar yen. 618 is right there. So I think the levels near term are still pretty clean. You are getting obviously divergence on these last 3 highs. 1, 2, 3. Price action making a higher high, the oscillator making a lower high, subsequent lower high. So it looks good, at least on a preliminary play here, Pooja. I would want to see a little bit of a rebound maybe off the weekly open on a stretch higher. If you're not short, guys, that might be your opportunity to get the entry against that stop or against that high, for a stop against that high. Ultimately, like I said, 106.38 would be the break I would be looking for to get this thing going. Once we clear basic trendline support off last week's low, I think you're right back on track. All right, Pooja, does that help? You're in the money a little bit already, right? So you're about 30 pips up, almost. Let's take a really closer look here. Yeah, and I like to see this reaction at the high. See that failure right ahead of that trend line. Once you spike into it, mean reversion pullback. And on the final test, again, the data print was probably what prompted this, but on the final test, boom, right back into that same slope, reversal lower. So, yeah, I'd have to say, I mean, it would look great if this was the exhaustion high. Look for a rebound or reversal off the weekly open to give us some sort of stretch as close as you can get towards that. If an hourly doesn't close near the lows, I'm out. Yeah, I'd probably play it that way too. I don't really want to make a judgment call based on the hourly call per se, but if it stays below 106.89, I think I'd be still comfortable. But yeah, I think if you get a pretty mean reversion on the hourly close and it closes well off the lows, yeah, you're probably going to see that stretch into 107.45, 107.50. Remember, that was the level that we were looking for initially, but slope here seems to be doing the job. So pointless not to point that out if price is following it. Pooja says, yes, thanks. All right, cool. Okay, so that is dollar yen. The abomination still on the menu. You know, interestingly enough, we've been following this thing very closely over the last couple of weeks. And again, because of the critical nature of where we are, both on the daily charts and the weekly charts, I think it's something we have to be watching very closely. Keep in mind, again, I showed you this chart many, many times over the last couple of weeks, guys. This is the CBO 10-year note for treasuries in the U.S. You know, everyone's been talking about the treasury yields really ripping through resistance. But basic slope, you know what I mean? Basic slope has still continued to hold. We've been talking about, initially 290 was the region I was talking about. That's where the actual slope confluence was dead on. 1994 basic channel resistance, very, very long term, right? In yields, so 30-year channel or so, 20-year channel, whatever, converging on basic upslope resistance that we've been following just off the lows from 2016. Now, obviously the major swing highs for 2013, the high week close through 2013 gives you 304 on the yields. But basically, we've still been hesitating here. The reason I point this out, guys, is because obviously the strong correlation that you see with dollar yen and U.S. Treasuries, something to take note of, and specifically when we're trying to look at dollar yen, seeing a little bit of a reprieve here, this might be a decent tell. Okay, this might be a decent tell. So keep your eyes on the 10-year as well. Questions, comments, concerns? Pooja says, I'm putting weight on the hourly since we had a data print this morning, this hour. Not a bad way to play, Pooja. Absolutely. He says, thanks again. You're more than welcome. Always a pleasure to see you here in the room. All right, pound. Good old sterling. So we were right on the idea for the pullback. Unfortunately, it didn't get anywhere as deep as we were hoping. So, yesterday's update, again, to give you a quick reminder of what we're looking at with the pound. We'll come back to euro in a second. Here's a British pound. So the daily chart's been pretty clean. We've been talking, or the weekly chart rather, we've been talking about the ascending channel formation for the last year and a half. Bearish and bullish invalidation, is a ways away from where we are now. But momentum was coming into support. Price action was holding above a key pivot. The high week close for the Brexit calendar week came in at 36.75. So basically, the pullback off resistance coming into areas of support. The daily chart highlighted this basic slope off the lows that we made in November of last year. Nice 236 retracement here, 36.75. That same level, 37.90. Key support. We basically set the opening range for the month right there, right there. And we spiked into a high. We pulled back into slope support. Puts the emphasis on this range. From an intraday chart, here's what it looked like. So the scenario I was looking for was, if you were long, look for exit here. If you're looking for new entries, look for a pullback off this region into the median line, or ideally the weekly open to get you that long entry for the ultimate breakout. So the pullback here obviously slipped just below the median line before recovering. Here's the Brexit, or here's the breakthrough, taking you through near-term resistance. So I do think you head back into the upper parallel. Maybe 39.85 is just a near-term pivot in price. That's the lows that you made here on that January 30th drop. But all things held constant, it still looks good. You're just trying to pick your entries here with the sterling trade, guys. We've been looking for a larger play off that 36.75 level since last week. It's just picking and choosing your entries has been kind of tricky here, but definitely making it through near-term resistance. Look for the close today above this region. Okay. Yesterday we highlighted basically 39.30s as that region of support. So look for a close above this region. Okay. To really validate the break higher. You're still looking to buy pullbacks, but 39.85 is right upcoming. So maybe you get a bigger recovery, or in the dollar, pullback in the sterling off of slope resistance. Remember, this is a basic slope resistance from last week as well. 1 touch, 2 touch, 3 touch, break, fueled acceleration. It's exactly where the rally capped out. That converges on the basic upper parallel here. Any questions on sterling? So there's like zero sterling data for the rest of this week. Okay, so look for the dollar to really be driving most of the price action here on British pound. Ideal scenario from here, from a trading standpoint, so we've given the analysis of what we think our bullish invalidation now gets raised to the weekly open. 38.48 is going to be the level of which, if broken, we're gonna cease all operations on the long side of pound. But from here, if you're not holding anything, you're looking for new exposure, look for a fizzle out, maybe a pullback off this region to give you a better entry, maybe a play back into the median line, which would converge right here on downslope resistance, now support. If you're holding long exposures, I would be looking to trim some off here ahead of 39.85, okay? Pretty contentious region. Again, these breakouts in sterling, notoriously a professionally traded market. You get a lot of throwovers, which basically a break of resistance and a pullback, false breaks of support, right, and recovery. So don't get fooled here, but base case scenario, ideal approach, this rallies into the upper parallel, pulls back into the former parallel resistance, now support, maybe even the median line for this slope, and then continues higher. All right. Any questions on sterling? And again, one thing you want to look at for today, obviously we made the break. We highlighted this last week. 3-point trigger break in momentum basically gives us a topside play. Support ahead of 40, means the uptrend remains intact. Look back on the oscillator. We haven't seen a dip below 40 since August of last year, essentially. So put all that together with a break of what seems to be the initial monthly opening range, right? That's your monthly open. Here's your monthly opening range high. You pull back, you fail ahead of the monthly opening range lows. If this closes today above, 39.30 essentially, that same level we were talking about in the daily chart right here, we basically suggest that you have an opening range break to the upside and pound. We should be looking for that late month high. Right? So putting all the pieces of price action together, all things held constant, you're basically looking for near-term resistance close by, pull back to offer re-entry. Questions, comments, concerns on sterling? That's number 5. Okay, last but not least from last night's update, a little tongue twister there, was Euro CAD. So, this is a trade that based on a whole different bunch of time frames, you're heading into resistance, period, end of conversation, full stop. The level was basically defined by the 2016 January highs that you made. Here's a weekly chart of Euro CAD. The basic slope that we've been following. Forget the pitchfork just for a second, guys. If you take basic trendline support, extend it off the highs, boom, we're there. You know what I mean? So any way you slice it, 61 was going to be a huge region, 61.05. And we didn't do anything on this. We highlighted this well before we approached this region because we just wanted to stoke it out for a little bit. You always want to be conscious of trading these turns. But last week, things got pretty clear as price action indeed tried to turn. Here's what the daily chart looks like for EuroCAD. Even more so clear on the daily chart, I think, was that basic pitchfork resistance. Again, that 2016 swing high. We got a pretty decent spike and closed lower. The subsequent day, we tried to rally back towards it, failed, and closed well lower on the day. The initial tell in price, was a couple different things. The reversal play after the high that we made the following day, momentum broke right back below 70 on a daily close basis. Intraday, there was a tell also. We were looking at this basic formation, confluence of resistance up here. We had a nice momentum trigger even on a 2-hour chart, which had a 1, 2, 3 touch. The break happened early, right? That wasn't the play. Even when we broke that in momentum, we rallied higher. And on that rally higher, you marked divergence. And those are going to be your best signals, your best triggers, right? When you get a trigger break in momentum on a trend line, 9 times out of 10 people are thinking to themselves, oh, well, that's the time to enter. Not necessarily. It's telling you there's a graphical shift in the momentum profile, but that doesn't necessarily mean that's when you're entering, right? Now you're looking on ongoing divergence. And as I always tell you guys, that could go on for a while. And here, indeed, it went from the 2nd of the month all the way until the 7th. You saw that divergent signal continue to carry on as price pushed higher. We reversed off that high. Once we came back, this was the opportunity to get back in, a short against that high. It's been dropping down ever since. Our final target was 157.30s, if I recall correctly. 157.40s was our final target. Obviously, it turned just ahead, right? It actually registered a low right at 157.58 last week before turning this week. So look, last night we cited 158.97. That's our near-term resistance level. Aside from the fact that it's a basic 38.2 retracement, yesterday or last night specifically converged on basic slope or channel resistance. We're making a challenge of that region right now. Okay. We'll look at Euro in a moment. So I'm not really a big fan of necessarily trying to get short on this if we break higher from here. But at the same time, dollar CAD, I do want to see that start to hold. So if CAD strength outpaces Euro strength, this thing could resume lower. At the end of the day, this was the near-term level that we needed last week to see a break to really validate the reversal. That net level now moves up to the basic weekly open. Okay, 57.73. That would take you again right at that slope. Basic trend line support extending off the lows that we made in, what is this, January. after the year, basically, right? And the weekly open. A break below this, I think, would, at least in my mind, validate that a more significant high is in place, and you'd look to play extension towards 56.25. For me right now, I'm looking to see if this loses pace. Yesterday, I noted 59.40 as our bearish invalidation level. 57.40 was the low, right? 59.40. I'm sorry, a little flustered here. 59.40 was our bearish invalidation level. That's the 50, and basically would take you right back above that swing high and would validate the channel resistance break. So nothing to do here. If you're holding along, I'd be looking with great interest on the approach in 59.40. If you're looking for a new position, if this fizzles out, you get some divergence to momentum, some sort of signal, might be a decent play to play it back on the downside, but we'll have to judge that once we get there. I just wish we had some more slope to work with besides just these 2 reference points. See how EuroCAD pans out, but the reversal off of which we came last week was huge. The play was into channel support. We turned just ahead of channel support, so this could be a raised floor, which would suggest, again, that you're actually got a little bit more upswing to go. So I'm going to shelf immediate setups on this, but certainly the downside reversal off resistance yesterday was in hand. If that is a more significant high near term, we should be finding resistance on a last approach near 59.40. Puja, 59.40. If we get a decent entry, says okay, got it. Yeah, she's asking where would you re-enter the short in EuroCAD, if at all. If this thing rips higher today and we get some divergence, a trigger break in near-term price action, your classic breakdown off of major resistance, you recap half the move or you retake half the move, and then it just continues lower, right? There's no Fibonacci level here. 50% is not a significant technical level per se. But certainly I can show you a million examples of where the market just pairs half the move and moves right off. So I'll let it float up into there based on my, where the euro is. I do think that could probably bounce too. So I don't want to kind of cap myself and work too rigid on this. You're coming off a huge resistance region, yearly resistance. And, if this is going to be a more considerate high, 50% of the move should be held as resistance. Make sense? Pooch says, okay, got it. Right on. 57.73 would be the breakdown for conviction, right? For the resumption, or at least to suggest a more significant high is already in place. All right, that is EuroCAD, number 6 on the session. Let's go back to the CAD setup. So here's dollar CAD. I know Jamie's been watching this one very closely as well. Dollar CAD is playing like textbook, and this is one of the reasons why I think, for EuroCAD, despite what I'm looking at with the euro, I'm not all that opposed to looking for EuroCAD lower. So, we'll go to the previous update where we talked about dollar CAD. That was last week. Here's what dollar CAD looked like on all the charts. Weekly charts, we've been following this very closely, right? Last week, we failed to close above the 50% retracement of the decline from last year's high. That was 29.27, right? Here's what it looks like on the daily chart. We tried with all our might, but on a weekly basis, price just couldn't finagle it. Here's dollar CAD on the weekly. Okay, so we even posted a reversal weekly candle off that. Not outside the realm of possibility, just going to put this out there, for price to see a stretch into this huge confluence region. You have the 618 retracement of the decline from last year's high, basic trend line resistance, and upper median line pitchfork resistance as well. If you take a slope off the lows from last year and this year, mirror it to the slope off the high, or from the high of late last year, that slope converges right there as well. It's important to always have the broader picture in view, right? Worst case scenario, if dollar CAD just rips, 31.30s is my line in the sand, right? 31.30s cracks the whole premise of the decline that we've had since the 2015 highs or 16 highs, basically gets thrown out the window. That being said, this is still a huge resistance pivot we've been watching since last year. We even posted an outside weekly reversal off this in December. And here we are again with failure and move lower. So, all things held constant, ideally, you move back below that 2012 trendline support and get this thing going, right? We're still within the confines of the broader downtrend. All we've been trying to do for the last couple of weeks is gauge where this recovery, if this is a recovery within the broader downtrend, where this recovery finds resistance. Our first major area that we were looking for was here. We plowed through that 2 weeks ago. Again, last week we reversed and failed to close above the 50%. And here we are this week within that range. Daily chart looks like this. One other thing I want to note is we did see a pop in the momentum barrier above that 3-point trigger resistance, okay, with this move higher. Is this the extent of the move? We'll have to see. That's what we're questioning. Dollar yen on the daily, it's not the cleanest thing, or dollar CAD rather on the daily. It's not the cleanest thing, but here's basically your monthly open. You pushed below it, and you did make a daily close below it last Thursday, but Friday we popped and closed the week above. This is now still near-term support in my eyes, 28.29, the March open. Intraday. Here's dollar CAD looks like. So last week on Friday when we were, or on Thursday when we were talking about this, the basic premise was, look, guys, this thing's in consolidation. Since the weekly open, it's got a really clean weekly opening range. You're basically looking for a break below 28.69. Or if we breach higher, I was thinking, even if you break this, look for possible exhaustion here or off 31.30, that same key region that we just talked about, right? On the weekly charts. So it was either the triangle continuation, right? And you look to fade that last stretch, or if we break to the downside, you're looking for a break of channel support. Well, we broke to the downside last week. We took out initial targets at 128.29. Great. Look at the rebound and look where we're reversing off of now, guys. Basic triangle or consolidation support, whatever you want to call it, 1.2.3 point break acceleration. Perfect reversal off resistance just today. So if this is legit, you're still looking for a move and a break below that basic trendline support extending off the February lows to get things going. Okay. So obviously last week we were looking at that at 2760s. I'd say that trend line now is somewhere in the range of 2780s, maybe even 2790, right? Just watching this as a soft target, but basically, guys, a measured move of the consolidation break does target 2723. And that's a conservative measured move, right? Yeah, any way you slice it. So you take the widest part of the triangle, 100% extension, or basically another extension of that same range to the downside. Objective technical analysis 101 would suggest we should be looking for a stretch into 2724. Any questions on dollar CAD? All right, that is number 7 on the session. And last but not least on my list, I had Euro. And this is another one, again, obviously we've been following since last week. Here's the Euro trade. The basic premise was, look, we broke the upside of this descending channel. We were testing the descending channel resistance as support. We had our bullish invalidation at 2265. Is that right? Yeah, 2265. Okay. We want to stay constructive above that. Well, here's Euro now. Okay. Didn't quite get 2265, 2274, 2273 was the actual low stretch last week. We closed just higher. At the start of this week, again, ideally, I was looking for one last stab into this region, or at least as low as I can to get a stop against this. And here's the rebound higher, right? So at the end of the day, near-term immediate topside targets, 2403 to 2409. 2409 at this point, guys, is the yearly high day close for 2018. So that gives you a little bit of a 6-pip range there, 7-pip range between 2402, 2409. Obviously, basically the breakout level that we were looking at last week on that stretch, still the same key region, 764 retracement, of the decline from the February high. So basically the February range converges on that same basic channel resistance. And that's basically the break we would want to see to validate a larger play higher in Euro. Remember, Euro on the broader charts, guys, still pretty darn constructive. Here's Euro on the weekly, right? Ultimately, the target that we were looking for in this last stretch early in the year was 25.98, basically 26. We came just shy, but on the pullback, we have yet to make one daily close back below that median line, or the upper median line parallel. And this slope obviously has been super fruitful, basing support, rally, rally, resistance break of the slope, higher, resistance break of the slope, caught it as support, right? Upper parallel caught resistance, held, breach, support, get that last stretch into that 2008 trendline resistance, which converges on the 618 retracement. And that's basically right at 25.98. Now, again, this is bigger picture stuff, right? On the daily chart, here's your monthly open. I'm going to stay constructive, basically above the monthly open. The monthly open sits just above the 50% retracement and basic trend line or channel support, whatever you want to call it, from down here in April of last year. Certainly that same slope converges on these three reference points right here. 121.67 is going to be my near term or my bullish invalidation. Okay, here's your weekly open or monthly open rather. Any questions on euro? So far looks pretty good, guys. Looks like a break of downtrend resistance. Check it as support, form a resistance slope, and move higher. The really emphasis on a break and close above the yearly high day close. You can see that once we made that high, it was February 16th. That singular day close has governed the highs on a closed basis. Always bring the daily chart and just bring it into a close. Bring a line chart in. See things clear, right? There's the rally right into resistance and pullback. That's really what we need to close above, to validate resumption. So I think the levels are clear. Yeah, we continue to track euro dollar pretty closely this week. Is it too late to enter now, KP? To enter the long side of the euro? I mean, KP, yeah. Look, I can't tell you what to do. All I can tell you is from a trading standpoint, remember, knowing the direction is only 50% of the game. Where's your stop here? I mean, if you're willing to put a stop against the weekly low and you're okay with putting a 22.90 stop, basically 110 pip stop, more power to you, KP. For me, on an intraday basis or even an intra-week basis, that's too big of a stop for me. That's too big of a stop. Now, you look to dress this up and find some new opportunities, right? I don't need this trend line anymore. If you draw this here, you see 1 point, 2 point, 3 point. So that confirms this slope, right? So basically, this is your near-term support that you want to stay constructive while above. Maybe on a pullback here, KP, as close as you can get to this reference point with a stop against this low would be the simplest form of way I would play this on a near-term approach. Okay, but buying here at the fresh weekly high, it's just not my game. Not my game. KP, does that help? Does that offer some? He says, okay, thanks. Right on. Right on. Good question. I mean, it makes sense, but yeah, this would be the quintessential chase. You'd be chasing here for sure. All right, so that's euro number 8, guys. Let me know if you have any other questions or trade setups. He says, still learning. Hey, you're in the right place, KP. Never gonna hate on that, man. No question is off the table. So feel free to throw any question you have, man. No matter how big or how small. Those are the setups I've been following per se here on the weekly open. Now, I don't know if many of you have been following the crypto block, guys. I've been writing a lot on this for Daily FX. I know that a lot of you here in the room don't really trade this actively, but I just did want to highlight that, look, all of the crypto blocks are basically heading into a major near-term support level, okay, of which if broken, you could see this thing spill and get super ugly, super ugly. So on Bitcoin, watch 81.58, 77.37. A lot of people were calling me crazy when I was, highlighting that basic support confluence early in the year. Here we are, guys. The technicals are the technicals. Trying to fight them just doesn't pay. So at the end of the day, if you see a break below this key region, I think you're on a disastrous sell-off in Bitcoin. Till that's, that said, you're basically still at support, even on near-term approach. 88.15 to 89.15 is still the level of support that we're watching. Moving through them really quick, Ethereum, same thing. That's basically sitting on slope support. Remember, these are all log charts, guys, not arithmetic or linear because of the huge disparity in ranges. So this one also sitting at a major key support level that we've been tracking. Watch that. Litecoin, another one. This support bounce last week was pretty convincing for me. I thought 158.15 was a really nice area to get long. I could be wrong. At the end of the day, while above the 618 line of this slope, which is what this is, I'm going to continue to favor a hold in Litecoin, just based on what we're seeing in the technicals. Okay, and as far as XRP, Ripple, that broke. Okay, not only the monthly open, which is right here, but also the lower median line parallel for this slope, which caught the resistance level exactly. 50 line saw acceleration on both sides, and certainly the lower parallel here, fueling the drop. We're now sitting on the low day close for the year. So you broke support. It does look lower, but you're sitting at support from just a lateral level, right? We broke slope support, lateral supports right here at the low day close. So if we push through 77, what is that? 7,600, that's the close right there, right on. If you push below that on a close basis for a day, I think you got a big sell-off on your hands. So all the Bitcoin, all the crypto blocks basically more or less coming into support, guys. Just keep that in mind. Hi, Mike. Sorry, missed most of the session. Thanks to the time change. Oh, that's right. Yeah, guys. Have you covered Aussie yen? I did. I covered it at length. Let me know if you have any specific questions. Obviously, I'll have this archived for you. But the basic premise here I was telling everyone is, I'm no longer interested in the long side exposure at all from here. DJ, we've been playing the long side on Aussie since that major support bounce 2 weeks ago, right? Now that you've rallied, we took out all the top side targets. This was one. This was another one. This was the final one. So for me, I really want to see how today closes. You know what I mean, DJ? If we close above that confluence region of resistance, 8450s, 8460s, you probably look for resumption. At that point, look for a pullback to buy, while above 8425. But, the play for me was the rebound off support. This is resistance. So if it's going to pull back, I think this would be the area. Eman says, welcome back to us. Hope you had a wonderful weekend. I did. Vermont got dumped on with snow, so the skiing was absolutely phenomenal. Thanks, Eman. Last Kiwi dollar on Thursday was too clear off 7,300. Now we are in a move higher. Any update, please? Sure. So here's what Kiwi looks like. Yeah, that thing broke basic trendline resistance last week that we were watching, right? You mean the last update from last Thursday? Yeah, I know what you're talking about. So Eman is talking about this. I don't think we have the last update here on the reports, but we did do it in the webinar, right? So look, let me show you the 240 real quick. And then, well, I guess we should start off with the daily. So here's Kiwi on the daily. It's super messy, and you guys know I've been saying that to you for a while now, but there's just nothing here that has been really warranted attention, at least on the weekly charts. The monthly actually looks a little decent, okay? The monthly chart shows that we opened the year right above basic slope support. Obviously, this was a pivot, 1.2.3 point. We broke, saw acceleration, but once we breached, acceleration as well. So we opened the year just there. A basic 786 retracement of the decline off last year's high has offered resistance on a closed basis since the start of the year. And, also since the start of the year, the 200-week moving average has been offering clear-cut support on a closed basis. Okay, bring this to a line chart. Boom, support, resistance, support, still resistance. Okay, so the weekly chart, I think, is the only thing that's been giving me a little bit more guidance, right, on what the longer term pictures look like. The near-term charts, that we've been following look like this, and this has really been, she said exactly in the webinar, yeah. So it played out pretty well, right? So here's the 120-minute. Again, we were talking about this upper median line parallel. We closed the week just there. We gapped higher to open this week. Boom. Didn't even get a tag of that former channel resistance, now support before breaking higher. So look, you got the February open. I don't think that's going to be a major player now, to be quite honest with you. I was looking back at this last night, just seeing that there are some decent pivots of it, but this is just a soft target, guys. Don't focus on that. Your next basic upside objective target would be 78.38 or 73.83. That's the 786 retracement of decline. And then these are the big heavy hitters, right? Basically the yearly highs, 2016 high day close at 74.35, 74.50. Near term, could be hitting some resistance here. Let me clean this up a little bit. Bear with me one sec, guys. You know what? You don't even need this 618 either at this point. That's your bullish inval. And this is going to get messy. I just want to see what it looks like. Bear with me one moment. It's not the cleanest, but it might be worth tracking. So that would suggest near term, that soft target we were looking at would be a level to just keep in consideration, 73.64. Eman, are you still holding a piece on this? Just want to see if the 618 came in something big. Ooh, and the 1618. Okay, let's clean this up. There we go. Last week's high is what I'd mark as near-term support and bullish invalidation for the near-term advance. That high would basically converge on the lower median line parallel right now. So this would be sort of your bigger bullish invalidation. Near term, I'd be looking for a support bounce off of that region. And then obviously topside break beyond here. You're looking for that stretch into the 786 retracement. She says, no, not yet, Eman. I'm tracking just in the meantime. Yeah. So look, if we're going to get a pullback, if the dominant sharper slope, remember, I'm always going to be more favorable to the deader slope or the less, the less aggressive slope. Markets will tend to hold those better just over the years. It's what I've found. So, based on this basic slope, we don't have any tests of this upper parallel yet. So this is just conjecture. I don't know. But if you get the pullback, this would be the initial area of support you'd look for. Bullish invalidation, I'd leave against that, what is that, the Thursday, Friday low? The swing low that we made in US trade on Friday. Not even. Like right here. And again, that would converge on basic trendline support, former channel resistance. Now, this is all real near term, right, Eman? If this moves forward in time, obviously this, will become less important. Same thing with that level at the February open. We always have to adjust our price action for time as the market moves. But, on the basic premise, that's what I'd be looking for in Kiwi near term. Does that help? Hey, D, great to see you in the room. All right. Any other questions, comments, or concerns, setups you guys want to review, guys? Feel free. Hey, man, you're more than welcome. My pleasure. If not, we'll go ahead and wrap it up here. I will see you guys bright and early tomorrow morning for another intraday update. Keep in mind, like I said, the data prints pretty much are going to be really quiet this week. So mostly it's kind of been what's been going on in the geopolitical background. You got all this tariff talk and all the backlash from that. But really, the dollar, I think, is the main driver here. So keep an eye on that DXY, and if we do, recover, you're basically still looking for a stretch exhaustion high to sell, right? If the analog is going to play through, we basically will be looking for, some further weakness here in the greenback to start off the week. All right. See you tomorrow morning, guys. Best of luck trading, and I'll see you then. Cheers.